Hello everyone, it's God made trader again, and we are back to our weekend analysis. Hope you guys had a wonderful trading week. So, before we start, if you're new to this channel, do well to subscribe, like, and you can check out my previous videos and my YouTube shorts as I post different my analysis and perspective to the market, and I keep updates on how the analysis has been have been playing out as the week goes by. We are in a very crazy period due to geopolitics, the US and Iran war, the rise in inflation, and all that. So a lot of things are in play this period, and this period is a period whereby, as a trader, you really have to be very careful. And also, one thing to you, I know this, not everyone might agree, but yeah, you also have to carry God along. Um, this market is it's a crazy place. It's a battlefield, and if you really want to survive, you need to carry God along. Yeah. So this period has been crazy. US and Iran has been going back and forth for almost 4 months now, or going to 5 months, and they've been on this their whole war and all that, and it's been making market really volatile and crazy. But I was expecting that, due to the World Cup that started, which have started on the 11th, they should be able to come up with a deal and settle their differences, which I saw that by today, which is Sunday, they should at least sign their deal. But I mean, I've given up on these guys. I can't even trust their words. But yeah, it's looking like they might reach a deal probably today because of this World Cup. So yeah, let's get to it. I'll be showing you guys the pairs that I'm looking at that has high probability. Also, most of our trades that we analyzed last week actually played out as expected. Yeah, most of the trade analyzed last week played out as expected. So from USOIL last Sunday, or when I uploaded my last video, and you can check, I was expecting this move to the upside before we dump to this downside, and as you can see, market came back up here, created gave us a reversal signal, which was this 1 hour bearish engulfing, and market sold off. Also, if you had missed this entry here, which is at this structure level, you had the other opportunity to get in here at this other block after market took out this inducement. So stick to the end of this video. I'll just share with you simply, or just quickly, how to simply read market structure, and how inducements are formed, because basically inducements are like liquidity zones. So we have external range liquidities, which can be found around highs or lows, or like swing highs and swing lows. Then we have internal range liquidity, which can be other block, inducements, fair value gap here. Sorry, not other, fair value gap here, and inducement. So that's basically it. So yeah, if we go to our weekly time frame, and what I do is I do a top down analysis, and from the higher time frame down to the 4 hour time frame, or even 2 hour, 1 hour. But yeah, the reason why I'm still bearish on US soil is because, as you can see, we have the monthly that's giving us this morning star or evening star candle formation, and we close back below this strong structure level. Yeah, now this month of June, we tested it, this structure level, and now we are heading back down. We are even down below this level again. So that's why I'm bearish. The evening star, the morning star candle formation is a really strong reversal signal. You can see that's also something like we have here. You can see this bullish stock bullish candle, this small back candle, and this bearish engulfing candle. So you can see it's pushing price lower. So the weekly is bearish to me. If I show you the weekly is bearish to me, you can see market is bearish on the weekly. We broke this low, we broke this low. So yeah, the weekly is bearish to me. On the daily too, we are bearish. So what I do is I make sure at least two time frames from the weekly and the daily is bearish, and I look for any entry signal like the evening star candle formation or morning star candle formation, bearish engulfing candles, or sometimes the tweezers. So yeah, so we're bearish on the daily. And we go down to the 4 hour, we are also bearish. So the three time frames align. So what am I expecting? Sorry guys. So what am I expecting in this video? In this analysis or in this particular US oil trade? I'm expecting a retracement back into premium levels before we head back down. So my long term, I'll be bearish long term till we get to this low to take out this inducement here. I'll be bearish long term, yeah. To take out that inducement, I think I can remove all these lines, all these trend lines. So I'm still sorry, I'm still bearish long term till we get back down to this level. So what I'll be looking for this week, this coming week, will be a retracement into this level, probably this other block here. Wait for a reversal signal, maybe a bearish morning star, evening star candle formation, or a bearish engulfing candle, then sell further down to this level. So that's basically it. So you can see we actually bearish here after taking out these highs and tested this other block here. We started creating lower low, lower highs, lower low, lower highs, lower low. Now what are we expecting? A retracement, a correction back to probably this level and give us a lower low. So that's basically it. Now, as simple as this technical analysis is, also there are other factors too that make market move, which is like fundamental factors or geopolitics. So yeah, market can be doing this, but something can come up geopolitically, fundamentally, that might make USOIL start pumping up, but it's not, it's just something to consider. So yeah, as much as you can read the chart, analyze, you also have to consider the other factors in play, fundamental factors in play. So yeah, this is the first um, pair on my watch list I'm looking at. So the second one is silver. So silver currently is has been bearish. If we go to, okay, the monthly is bullish, but the monthly created this morning star candle formation. So that's the reason why we've been selling after this retracement down. But now the thing is, we are still inside this monthly fair value gap here. We're inside this monthly fair value gap. If I should draw it from this candle high to this candle low, we are still in a gap, as you can see. So yeah, but also silver is looking like it's giving up its exhaustion. You get, like, it's the bearish momentum is looking weak, it's giving up. Do you get what I'm saying? And yeah, based on US and Iran reaching finalizing a deal, reason why I'm bearish on oil, and reason why I might start to see commodities like silver and gold push higher. So you can see on the weekly time frame for silver, we created this doji pin back candle formation after taking out this inducement here and testing this probably another block here. If we go down to the lower time frame, we'll see it. If we go to the daily, Daily created this morning star candle reversal signal. So I'll be looking to buy silver if I get a retracement down to this level, to this structure level. Yeah, I'll be looking to buy silver. So the daily is giving me a reversal signal confirmation. Now what is happening on the 4 hour? The 4 hour has been bearish. You can see creating high, low, lower, low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, and what am I expecting? A higher low before we continue to this level. Do you get? So yeah, this is just the market structure I'm showing you. Um, so I'll be expecting a lower high here. This is the higher high the market created after shifting structure here, and this is kind of like we are watching a market maker buy model, a reversal. So here we might be seeing price get back up to this level. So what am I expecting? Now what is silver doing? Silver is creating like a consolidation here. If you go down to the 1 hour, you can see this kind of consolidation. But yeah, I feel this might be an inducement that price might want to take out. Price might want to take out before pushing higher. So I'll be watching silver closely. Would be nice if I see a retracement down to this level then before it's pushed to the upside. So I'm watching silver. So yeah, my expectation is a push to this downside before we head back higher. Let me just remove this position too. So this is my expectation for silver. So this is how you plan your trade and you trade your plan. You don't just wait at market open and start buying or selling anyhow. You watch when the market is on standby and you do your proper analysis and you trade your plan, trade your strategy. Because when market opens, market can start being chaotic, market can start doing anyhow. So basically following your plan helps you stay disciplined, keeps you in check. At least you know, okay, if market is not doing what I want according to my plan, then I'm not trading. So yeah, we can have silver retrace back to this other block here, this level here, and head back to the upside. That would be nice to see for silver. So that's it for silver. Um same thing too for gold. Same thing for gold. Same thing for gold. I'll be looking for same thing for gold. Same thing for gold. Sorry, please. Same thing for gold. I'll be looking for this retracement back down to this level. If we get it before we push higher, but gold is kind of a bit weaker than silver. If you compare it, you can see silver is kind of pushing higher more than gold, which is just consolidating. So yeah, that's another thing to consider, because if you look at the gold to silver chart ratio, you can see gold is bearish. Gold has shifted bearish here. You can see all this break of structure, market structure shift, or will I call it the head and shoulder pattern. So we have this left shoulder head, and we have this right shoulder here. So, and now we've broken below this neckline and we have a retest. So gold is kind of pushing to the downside, which is why silver is showing more strength to the upside than gold. So yeah, I'll be keen more on silver. For indices pair JP225, um we've broken out of this trend line. If we go to the weekly, let me start from the weekly. The weekly is still bearish. So yeah, that's it. The weekly is bearish. You can see price has been pushing to the upside on the weekly. If we go to the daily, we've also been creating high, lower high, higher low. So we higher high, higher low, higher high, higher low. Now we are expecting a new higher high. If we go down to the 4 hour, if we measure from premium, the premium to discount, you can see price has already dipped into discount level, and now we are back targeting this external liquidity here. So that's why I'm bullish. So now the 4 hour is back to bullish, because initially the 4 hour was bearish. You can see 4 hour was creating, and that's how market does. We have the major structure and the minor structure, and now we've created a high. So I'm expecting a higher low, then a higher high. Do you understand? So that's basically it. So for this pair, I'll be looking to see a retracement and a takeout of this inducement, then into this other block. Do you understand? So that's what I'll be looking to. You can see we have the market structure shift. The aftermarket created this low downward trend. We created a market structure shift here. This candle broke structure. We created this. Now one thing to know is basically how inducement are formed this. So let's say market was creating a downtrend, 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 and now market decide to shift structure to the upside. Now what market does is market has shifted structure to the upside. What it does is most times it engineers liquidity, acts like it wants to start going higher. Early buyers get in here, then what it does it comes down to take out that engineered liquidity or inducement, then before pushing higher. Do you get? So what market does is sometimes it engineers liquidity before pushing higher. Do you get? So all this level here, all these are inducements, all these are inducements or engineered liquidity. Do you get? Market does it most of the time. So if you are not aware, you might get in here or get in here and buy, put your stop loss below this level, and market comes to take you out and still move in your direction. That's something you need to be aware of. Now what market does is it engineers liquidity probably just above a fair value gap on other block, a fair value gap on other block. And I said market moves from internal range liquidity to external range liquidity. Now this other block might exist, or fair value gap might exist around this level here. A market comes to test it. Same thing too for this place. We might have a fair value gap here. We might have a fair value gap here that market comes to fill in. Now, what is the internal range liquidity? Like I said before, internal range liquidity are like fair value gaps or inducements that form within a swing high and a swing low. Now, when market shifted structure from here to high, we created this new swing high and we have this swing low. Now, this become our external range liquidity, and any gap or inducement within this range become our internal range liquidity. So basically, that's what market does, from internal range liquidity to external range liquidity, back to internal range liquidity to you get? So all this, as is breaking structure, all this break of structure are what we call break of structure, BOS, are what we call external range liquidity. Do you understand? External range liquidity. Now, another thing too is another form of liquidity is trend line liquidity. Now you can see when market was creating this lower high, lower low, lower high, you can see it was creating a trend. Now, all these highs here, all these highs are liquidities, all these higher liquidities that if market decide to shift structure, market will target all these liquidities here, because we have sell stops here, sell order, sell stops here, sell stops here, sell people that placed sell positions here. So if they have not taken profit, market starts shifting back. Market tend to take out their stop loss here. You get? Now this is basically the classic market maker buy model. So this is where market shift from a sell move back to a buy move. Do you get? So we call it, it's basically the ICT concept, the market maker buy model, which is where price move from sell to buy. Now this place where market shifted structure could be a a daily fair value gap, a daily internal range liquidity. Then before it targets this external range liquidity. Okay, let me break it down. So market moves, let me say on the daily time frame. This is the daily time frame. Market is creating high, low on the daily, high and low, high. Sorry. Market is creating low, high. Do you get? This is the daily time frame. Now, if we take this daily on this particular move, do you get this particular leg? Let's say this one to this place. Now, when market is retracing, let's say on the 1 hour, price can be giving us uh lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, till we get to this level here, this internal range liquidity on the daily, which is a fair value gap or taking out daily inducement. Do you get this internal range liquidity on the daily? So till we get to it, deep into it, the market shifts structure and start creating this move to the upside. So they say time is fractal. So what market is doing till we take out this enter external range liquidity. Now inside this move, this 1 hour time frame, people that trade the 1 hour lower time frame, they can also still be taking trades here. Do you get? But swing traders are basically swing traders that are buying. They are basically targeting to buy from these swings, all these swing lows, these swing lows. Do you get? But as a day trader or a scalper, you can also take this move. So this move like this is what has created the market maker buy model on the lower time frame. Do you get? Now this swing here to this high is where price is moving from internal range liquidity to external range liquidity. So I don't know if you are getting what I'm saying. That's price moving from discount to premium level, internal range liquidity to external range liquidity. Do you understand? So if you are buying, if you observe the daily trend and market is bullish on the daily, what you need to do is just come down to the lower time frame. If you spot market is retracing back to probably an internal range liquidity, you wait. Once market fills that gap, you look for a market structure shift and you wait for a retracement. This market structure shift, wait for a retracement, probably an inducement that rests here, that price takes out. Then you buy the move to the upside till price take out this external range liquidity. Do you get? So this is a classic market maker buy model. Now the same concept here of all that I've explained applies to a market maker sell model. Do you understand? If I invert it, same thing too. Same concept. This is the market maker sell model. Price was creating higher highs, higher lows, and market shifted structure created inducement, took it out, and started heading lower. Do you understand? Same downward trend on the daily, same market maker sell model. Do you understand? So this is basically how how the market moves. Market moves to take out two things: fill imbalances and take out liquidities. Do you get? That is from internal range liquidities to external range liquidities. Now, like I said before, price can take out inducement, fill a gap. Also, price can react off an order block, a breaker block. Do you get? But you make sure that you're buying from a discount if you're in an uptrend back to premium. Do you understand? Now, sometimes price can do this rather that retrace into a discount. Price can react off this mitigation block, this structure level here that created this retracement. You see, price can be reacting off it. So it's for you to know That's why if you are looking to buy, you wait to see a reversal signal, or you make sure that you're not buying from an inducement that is forming. Do you understand? Do you understand? So that's just basically simple market structure I decided to talk about in this video. If I go to the chart, you see it all that I'm explaining here. So if I go to the daily, now what do you see here? You can see that price is creating. Let's start from here: highs, low, higher, higher low, higher high, higher low. Now before this high, what the market did do here? Before this high, market created what? An inducement on the daily. An inducement on the daily. So time is fractal. It just depends. This same concept work on whatever time frame you are trading. Do you get? Do you understand? If you are trading the daily, you look for your entries around the 1 hour, or you look for your substructures around the 1 hour. If you are trading the weekly, you look for your substructures around the 4 hour or 2 hours. Do you get? If you are trading the 1 hour, look for your substructures around 15 minutes. Do you understand? So that's it. Now you can see price filled what? We have this fair value gap here. We have this internal range liquidity, fair value gap. Do you understand? We have this internal range liquidity. Now, what are we looking to target? We are looking to target what? This external range liquidity. I don't know if you guys are getting it. So we are looking to target this external range liquidity. Now, this is the daily time frame, right? We have this inducement. Market has taken it out. We dipped into this fair value gap internal range liquidity. Now, if I go down to the 1 hour, what do I see here? I told you about, as price is coming to this level, it can create its own substructure level, substructure trend. So you can see we have this lower high, lower low, lower high, lower low, lower high, lower low, lower high here, lower low. Now what the price do? Price shifted structure. Do you understand? Price shifted structure. Now we are all this place. Now to me, it's an inducement forming. Do you understand? Inducement. Do you get? Price still pushed higher. So what I'm expecting now for this analysis I'm doing for you guys is for price to retrace back into this level and head higher. Do you understand? So that's basically what I'm expecting. That's basically what I'm expecting. So this is my JP225 trade analysis. Now, if you look at this, let's say, if you look at this, um, if you look at this on the 4 hour, probably before all this move here, sorry please. Okay. Okay, if you look at all this move here, all this move before, just before this vertical line here that I placed, let me use a more brighter color. Now before this vertical line here, you can see price was creating, price was creating don't for ignore all this candlestick here. Look at this price action here. Price was creating, um same thing too that happened here. You can see all this were inducement. Price came back into discount from this swing high, swing low to this swing high. Same thing too here. We were creating sub bearish structure before price shifted to the upside bullish and came back to test this level, though price didn't dip to take out this inducement before pushing higher. So sometimes you might miss your move. Sometimes market won't do what you planned, you get. So it's the market for you. But look at what happened here. Price was creating bullish structure, do you get? Highs, low, high. Price did what? Created this inducement, broke above it, came back to take out this inducement, test this mitigation block level, this or this structure level here, this other block, then before continuing higher to the upside. Do you understand? So that's what price does. As price is moving to the upside, sometimes it engineers liquidity, then come back to take that liquidity before it continues to the upside. So that's what I'm anticipating here too. I see this as liquidity that I'm hoping price to take out before continuing to the upside. And also probably we test around this trend line level. Do you get? So that's just it for JP225. Same analysis for UK 100. Same analysis for UK 100. We have this inducement here. I'm expecting a retracement back into this other block before we continue higher. If we go to the daily, you can see the daily has created this bullish engulfing candle, this kind of morning star bullish engulfing candle. So I'm expecting a retracement back into what? This fair value gap. Now you can see that on the daily we have a fair value gap here that has formed. On the daily you have a fair value gap here that has what? Formed, which is an internal range liquidity. So that's what I'm expecting. The price would come back into this internal range liquidity before taking back external range liquidity. Now that's the daily. If I come back down to the smaller time frame, you can see price is still bullish, creating higher highs, higher lows. Like I said before, as price is moving up, price can engineer liquidity, come back and keep pushing higher. Same concept here, same expectation here. So you can see price has shifted structure here, created this high, kept on creating higher structure. So what I'm expecting is a retracement into the internal range liquidity before we push higher to external range liquidity. Do you get? So all this is an inducement. So I'll remove this and so it will be clear. So this is just what I'm expecting for UK 100. Hoping to see it play out. Also, we have this major trend line from here. We have this major trend line from here. Do you understand? Okay, now let me show you guys something. I think I mapped this out. Now look at all this price action here. You can see price from here has been creating bullish trend, higher highs, higher lows, higher highs, higher lows. You can see price has been creating bullish trend, higher highs, higher lows. Now what happened is price got here, created a market structure shift, broke this structure here, still broke multiple structures here, shifted bearish. Do you get? Now as price shifted bearish, we came back to test this other block here. I don't know if I said it earlier, but I said price can engineer liquidity like through multiple candles. Do you get? Multiple candles. Do you understand? So this like your inducement, or price can use a single candle, that is the next candle retracement, as your engineered liquidity or inducement. Do you understand? So what we have here, price, this candlestick that broke structure here, multiple structure, the next candle created the inducement. If we even go to the lower time frame, oh shoot, if we go to the lower time frame, if we go to the lower time frame, you see this a clear inducement here. So we have this inducement, then price came to test this what? Other block, bearish other block. Why also feeling what? This fair value gap here. Then before we head back lower. Now, like I told you, this bullish trend here, as price is creating this trend, it's also creating liquidities, trend line liquidity that price will want to take out later. Now you can see price came, broke all this structure, started taking out this trend line liquidity, took out this one first. As price broke structure, we came back here, created an inducement, came back to test this breaker block here. That is this last bullish structure level or bullish swing low that price broke through, created inducement, then came back to test it. So we entered at the bearish breaker block. Do you understand? Then we kept on breaking structure. So now what is price doing? Price is bearish. Price is bearish to the downside. We are breaking structure to the downside. Higher lows, higher highs. So you can see inducement, lower high and lower low, lower high, lower low. We did the same thing here, came back, we took out this inducement here, all this inducement, this project engineered its own liquidity here. If there's no inducement or liquidity, price sometimes engineer its own liquidity before taking it out and heading back. Sometimes price also doesn't really engineer liquidity in terms of candlestick. What it does is it fills imbalances. You get, it fills imbalances in terms of fair value gap, yeah, and liquidity void. But yeah, price did that. It tested this breakers block structure, which has also formed the resistance before and headed back lower. Same thing to that happened here. We repeated the same thing, broke structure. We tested the breaker block level here, multiple breaker structure, and headed back lower. Then before we now shifted structure again to the upside. You see, price shifted structure again, market structure shift, came back. You get. So that's basically what it is. Price eventually finally took out this trend line liquidity that it created here. You get. So that's basically it. That's basically it. Now why I'm bullish is to this level is because you can see this clear trend line from there. The open price will come back to take out all this trend line liquidity. Do you understand? So that's my expectation for this market. I'm expecting price to come back to take out all this trend line liquidity. Why it feels this internal range liquidity here. Same thing for NAS. Same thing for NAS with if we go to the weekly, we have this weekly fair value gap. You can see from this candle high to this candle low, we have this gap here that price has come back into. Now if we go to the daily, what did price do in the daily? It engineered liquidity just around that gap. You can see this is an inducement here, engineered liquidity and taking it out. So we are heading back to take out external range liquidity. If i bring it if i bring it to the 4 hour, you can see price has been creating lower high, lower low, lower high, lower low, lower high, lower low. Then price did what? Shifted structure. It shifted structure here to the upside, creating higher high. So what am I expecting is a lower high. But we have an engineer liquidity on inducement here, and we have this trend line to be retested very well. So yeah, I'll be looking to buy from this other block around this level. Also, we have this gap here to be filled. After this inducement, I'll be taking out then while we target this external range liquidity high. So same thing for NAS US 500. We have this weekly internal range liquidity. We also tested this daily order block. We also took out an inducement on the daily. Then we shifted structure here to the upside. We engineered inducement here, and I'm expecting a retracement down to this level before I look to buy. Is that clear? So that's basically it. That's basically it. Looking to buy from anything from this level, from this range here, I'll be looking to buy. So to me, this is a bullish order block slash breaker block because of this high here and this other block here. So anything from this range, this zone, I'll be looking to buy. So that's basically it. These are the main pairs I'm looking at for this coming week. BTC is really not clear to me currently because I mean this looking scattered, but these are my main pairs I'm looking at this week. For DXY, as from my previous video, I was still expecting DXY to take out this high. Now this is it. See what DXY is doing. If we go to the daily, you can see the daily is clearly bullish, higher highs, higher lows. And now what do we have here? We have this internal range liquidity here. We have this internal range liquidity here. What am I looking to target? You know, I told you price move from internal range liquidity to external range liquidity. So yeah, we have this internal range liquidity here. I'm expecting price to target external range liquidity and this buy side liquidity of this move that led to this swing low here. You get. So yeah, we'll be watching DXY. If we go to the 4 hour, um we have price is currently at this internal range liquidity, so yeah, I should be looking for higher prices on DXY. But let's see if eventually price decide to shift and break this trend line and close back below this fair value gap on the daily, then might start seeing price do what, target this trend line liquidity. Am I clear? Might see price starting to target this trend line liquidity. So yeah, but I'm not really sure. I'll be waiting to see what the next daily candle does. What the next daily candle does before I think on getting in on DXY. What I would have loved is if we had more deep retracement into this level before I think of start buying. But yeah, I'm still watching it very well. I'm still watching the XY. And the XY will determine if I would take position on basically GPP USD and Euro USD, which is the inverse or the opposite of what the XY is doing. Do you understand? For Euro USD, we still have this other block here to be filled. This other block here and this inducement taken out. For GBP USD has reached its own level, but I mean DXY is what is determining how these other pairs will move. So yeah, that's one thing you also need to know. You have to use DXY as your guide to trading any USD pairs you get. So I'm not really on USD pairs or currency pairs this week. I mean, this week we have a lot of fundamental news. We have Bank of England interest rate decision. We have FOMC this week. We also have, I think, one of the AUD peers. We also have Bank of Japan this week too. So yeah, this week is packed with a lot of fundamental news. So you just have to be careful and make sure you're on the right side of the market because this week there might be a lot of manipulation based on the fundamental news. So you just have to be careful. So to not make this video too long, I don't know. I guess video is already quite long, but yeah, I'll be wrapping things up. Those are the basic pairs I'm looking at this week. I'm not looking to make things too much or too complicated. See, guys, the thing about the market is just make it simple. Just make it simple. Don't try to complicate it. Follow what structure is saying, and yeah, you should be fine. Basically, if I look at this jar now, jar was not on my watch list, but if I want to analyze it, I mean, the daily is doing what is showing higher highs higher lows, higher highs, higher lows, higher highs, higher lows. And what should you be expecting now? You should be expecting a higher highs. Do you get? That's basically it. That's what the market is showing you. Now, if you come down to the lower time frame, you can see prior to this move for the higher low, you can see on the substructure we are having its own um lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Market shifted bullish to the upside here, creating higher high, and now we should have a higher low, then continue to the upside. You get? Also, we have this trend line liquidity here. We have this trend line liquidity that price should take out. So that's basically it. That's basically it. Probably this is an inducement that formed on jar. So if I'm to take this, I'll just wait for price to come to probably around this level on jar. Call this demolish breaker block slash other block. Price will come to around this level. We have this inducement here. We have this inducement here. And yeah, just wait, look to buy from when price come here. Set your SL below this candle wick and target this external range liquidity. I should give you 1 to 5 weeks to reward. You get? So that's basically it. That's basically it. That should be all for this video. I'll be also dropping some other topics aside this normal weekend analysis. Yeah, I'll be dropping some other topics. Do well to share this video, comment. I really appreciate. I'll see you guys in the next one. Peace.